Good day everybody, this is Brandon from Ageras and today we are talking about tax returns. Looking for an easy way to find an accountant for your small business? Head to Ageras.com to receive your 3 free quotes from our large source of trusted accounting professionals. Ageras, finding an accountant has never been easier. To start out, we have to discuss income tax. Income tax is exactly as it sounds. It's a tax put on any income you may have made throughout a fiscal year. This can be anything from payroll and job earnings to unemployment earnings to contractor earnings or even lottery and gambling winnings. The two main income taxes are federal and state income tax. The amount of federal income tax that you pay all depends on the amount of income that you make. Different amounts of income get taxed differently. This is called tax brackets. As you can see from the graph, the percent of your income that is taxed depends on how much you make. For instance, if you fall into the 35% tax bracket, your income will be taxed at 35%. Similarly, if you fall into the 10% bracket, your income will be taxed at 10%. So that's federal income tax. The next would be state income tax, which I'm not going to get into specifically because each state is different and the way they tax is very inconsistent. So now that we've gone over income tax, why would I be getting a tax return? There are many reasons why you may be getting some of the taxes that you paid on your income back as a tax return. One of the biggest reasons is because of tax deductions. When you're filing your tax return, you may be eligible for certain deductions, meaning your tax liability decreases. If that happens, this means you might actually be owed money back on your taxes. Similarly to tax deductions, tax credits may also contribute to a return. Tax credits are amounts that offset tax liability or other taxes owed. Often, credits are attributed to the care of a dependent child or senior, maybe education or pension, and many more. There are many different credits that may be available to you. So after reporting your income, deductions, and credits, the government may find that the amount that you paid in income tax is actually more than the amount that you owed with your qualified deductions and credits. This results in a tax refund or money owed back by the government for overpayment in your taxes. Similarly, however, after reporting everything, you may find that you actually owe money in taxes. This is because either not enough money was withheld from your paychecks, or no money was withheld at all if you received a 1099 form. The amount of your return, and if you even get one, all depends on so many different variables. So if you're looking for advice on your taxes or your return, it's best to seek out a tax professional, as they're qualified to give you the most accurate advice on your situation. I would not advise seeking advice from someone who isn't a tax professional, since their advice could be wrong and it could end up hurting your situation. Now, if you're looking for help with your taxes and returns, whether you're an individual or a small business owner, be sure to head over to Ageras.com. From there, you can get 3 free quotes from our trusted source of tax partners. Now, thank you very much for joining me today as we go over tax returns. If you have any questions, be sure to leave them in the comments section below. Make sure to like the video and subscribe to the channel so you don't miss any more of our content. This is Brandon from Ageras. Thank you very much for watching.